Hey everybody, Steven Sitkowski here. I am coming to you from downtown Manhattan. So yesterday I had the great privilege of doing a couple of presentations with Shark Tank's Barbara Corcoran. So we saw somewhere in the neighborhood of 2,500 people who all came out really anxious to learn how to make money. And so that was great fun. So I'm sitting in my hotel room. I'm actually flying to Canada today. I've got 6 days there where I'm going to be training people. So I've had the great privilege of training now, I think, somewhere in the vicinity of 1 million folks that have been in front of me who I've tried to inspire and educate and get better prepared for their financial future. So here's what I wanted to talk to you about. We have markets at an all-time high. The Dow hit 27,000 for the first time in its history. The S&P 500 hit 3,000. Now, I know what you want to know. Why is the market going up, and will it continue to go up? So basically the market right now is responding to two things. First of all, Chairman Powell has indicated that he is going to cut interest rates. So basically this market has a 100% chance, at least in their mind, that interest rates will be reduced. Okay, so why are lower interest rates good for the stock market? Well, think about it. Most companies borrow money, and they borrow it on a variable basis. So when interest rates go up, their cost of money goes up and vice versa. Well, if you lower the cost of a company's interest for borrowing capital, what do you do to their bottom line? Bottom line goes up. When the bottom line goes up, what happens to the value of the company? It goes up as well. Now, there's a couple things that have me a little bit concerned. And I think Mr. Powell is going to have to go through with an interest rate cut. Since he's hinted at it and the markets have responded, I think now he's sort of painted himself into a bit of a corner. But let me tell you what concerns me, and that is we just saw the biggest jump in inflation on a monthly basis for a year and a half. The Fed doesn't like inflation. Their number one job is to protect poor people and middle class people. So for wealthy people, when we deal with inflation, no problem. We have assets that are going up in value. Poor people don't. And so instantly what the Fed will do is they'll try to slow down the economy to reduce inflation. Secondly, the last jobs number we had, we were expecting about 50,000 new jobs to be created. Turns out that number was 224,000, which again, what does that indicate? It indicates a fairly robust economy, which leads to, you got it, inflation. So there are a couple of things that are out there right now which would lead me to believe that if Chairman Powell had his way, he would delay the rate cut. But I think we're supposed to see it in the month of July. So this is what's pushing the market. Also, we've been quiet here recently on the tariff front. So we're not doing battle with China right now, which is one of our major trade partners. And every time we end up in a battle with them and we start threatening to raise the tariffs on their goods, you see the stock market responds accordingly and it falls. So right now everything looks great. I would say I'm cautiously optimistic. I'm about 60 to 65% bullish. You would think I'd be 100% bullish, but I'm not, because I recognize everything runs in cycles. So be sure and always hedge your positions. And I'm going to be teaching you how to be able to do that through the course of this educational series. And make sure that you are prepared and that you are watchful and you keep an eye on the financial news. And if nothing else, just keep subscribing to my YouTube channel. And be sure and press on the notification bell so that every time that I put out new content, which will be several times a week, that you will be informed. So until next time, God bless. Have a prosperous day.